Hey, David Garofalo is our, well, I've proclaimed him as our gold expert. He's the chairman and CEO of Gold Royalty Corporation, GROY, the NYSE American. And he's once again back to talk to us about the state of gold. David, great to see you again. How are you, sir?
I'm delighted to see you.
I've had a question for you, and I don't think we got through this the first time, although I asked it, and I think we got waylaid by Mike or Greg or somebody. With respect to gold being a hedge against inflation, that has been an argument for many, many years, and it's gone in and out of vogue. Are you in agreement that gold is a hedge against inflation? And if so, talk about where we're going with this.
Yeah, it is. I think it's an accurate barometer of what real inflation is. And don't believe the headline numbers. They vastly understate the reality on the ground in terms of what it costs to feed ourselves, shelter ourselves, put fuel in our cars. We're all experiencing double-digit inflation. What drives gold up? Interest rates, and we are in negative territory in spite of the fact we've seen the Fed increase interest rates at unprecedented levels in the last couple of years. Inflation is actually being exacerbated, accelerating, and that's driving real interest rates down. Real interest rates, simple arithmetic, is the nominal rate less the rate of inflation. It's in negative territory. That's driving capital into gold.
So talk about where inflation's headed in your opinion in the short term, long term. When do we get back to real inflation being in the twos, where the Fed likes to have it, in terms of and what's real inflation versus what's being reported?
Yeah, look, the Fed's going to report whatever they want in terms of headline numbers. I think it's going to vastly understate the reality on the ground. I think inflation's actually going to become worse because I think the Fed's going to pivot prematurely in order to deal with the massive amount of debt that the federal government strapped on. U.S. debt levels are now $50 trillion. They're adding $5 trillion a year. Annual debt service is $1 trillion, and it's only going to get higher as Treasury bills reset from historic lows that we experienced several years ago. And so effectively what the Fed wants to do is inflate its way out of debt, inflate the U.S. government's way out of debt. And I think what you're going to have is a competitive devaluation of currencies globally. If the Federal Reserve is going to continue to have easy money, then other central banks will do that, and that will just drive down the value of fiat currencies against the gold price. So the gold price is going to go up in every major currency, and it has achieved record highs in every major currency.
David, you bring up a good point there. When you talk about U.S. debt, a lot of that is T-bills, T-bonds, government bonds, and so on and so forth, that they not necessarily owe. I mean, they're not paying car payments here. They're not paying mortgages. They're not owing other countries as much. We're talking about what they owe investors into the U.S. government. And the interesting part is that we are leveraging ourselves like we always have as a country, and we're the least dirty shirt in the hamper. Every country does it. The problem is when they all do it in concert, is when the problem arises, which may put us into a position to take a look at alternate investments. Is that what you're saying, David?
Yeah, absolutely. I think there's a currency than a commodity. And currencies trade well relative to each other based on real relative interest rates. So gold yields zero, but it isn't getting printed. Whereas the treasury bills are yielding negative on a real basis, and it is being printed. So the fiat currency are being undermined by easy money currency that can't be printed.
So your thing positive, what you said is the fiat currency is undermined by the real currency being printed, which means that currency, which is backed by gold, for example, is going to end up being a stronger currency than fiat currency, which is, for example, what the U.S. dollar is based on. Go ahead, Mike.
David, is there a better form of gold to own than others? Is it doubloons? Is it bars? Is it Krugerrand?
Is it ETFs?
Coins? Is there one where you're like, this is what you should be buying?
Yeah, look, any of the physical is fine. If you're looking for the lowest risk way to play gold, you buy the physical. You can buy it in any form, in its purest form, 99.9% gold, whether it's gold bars or gold coins. But if you want leverage the gold price, then you're going to probably want to look at gold equities that should provide you leverage in terms of their profitability. As the gold price goes up, their profitability should go up multiples of what the gold price does. Unfortunately, most mining companies are experiencing cost inflation like we are in the general economy. So as a result, I think royalty companies are the place to be because that's top-line exposure with complete protection from inflation.
Yeah, and keep in mind, physical gold also has a premium. I mean, if gold is trading at XYZ per ounce, physical gold is trading XYZ times about, I don't know, another 10, 15% because physical gold is more expensive. Talk to us about the Gold Royalty Company, GROY, stock symbol. You guys are basically financial institutions for the mining industries. Is that probably the best way to put it?
Exactly. We provide capital to the developers, the explorers, the operators that are looking to build, explore, or expand their mines. And in return, we take a royalty back on the property. And it's a top line royalty. It's a percentage of the gross revenue, and it's perpetual. And so as they grow the deposits geologically, we get the benefit of that exploration upside, but we don't contribute to the exploration budget. So once we own a royalty, we own it forever, even as they continue to explore and expand their deposits geologically. So not only do we get unmitigated leverage to the gold price and protection from inflation, we also get leverage to the exploration success of the operators that own the underlying properties.
Hey, David, what's next for you guys? I mean, you've got you're a leader in the sector. You're growing. You've got something like, I don't know, 240 royalties in the best mining areas in the place. Talk about this.
Yeah, look, we have a doubling in our revenue this year. That's a huge catalyst for the stock. And we're, for the first time, and we're only a 3-year-old company, we're in free cash flow positive territory and earnings positive territory. In the fourth quarter of 2023, we reported positive earnings for the first time in our history. And that's a remarkable achievement for a startup that's only been around for 3 years. We IPO'd in March of 2021. And we have 60% compounded annual growth in our revenue right through the end of the decade from a well-diversified royalty portfolio of over 240 royalties, all within the Americas and the best jurisdictions geopolitically.
For you, what are you looking forward to most next for the next quarter? With respect, are you looking forward to better inflation, more inflation, which benefits you? Let's talk about that a little bit.
Well, I am looking for the gold price rally to continue unabated, because the reality is inflation is being exacerbated by easy money, by the drive to cut interest rates, which your Federal Reserve is going to do this year. And I think that's going to drive gold to all-time highs. We're at all-time highs in nominal terms, but we're not at all-time highs in real terms, because if you look at what peak gold was at the last inflation cycle in the late 1970s and early 80s, in real terms, that would mean gold is close to $3,000 an ounce. So we're still well off the all-time highs that we experienced in the early 1980s on a real basis. And I would argue the ingredients for a prolonged gold rally are much more constructive now than they were back then, because the Federal Reserve and central banks globally are really not serious about taming inflation.
I mean, if you look at GLD in the last month, which is a gold exchange traded fund, man, I would not want to be shorting gold right now.
No.
And I know that. David, thank you so much. I appreciate it. David Garofalo is his name. He's the CEO and chairman of a company called GROY, Gold Royalty Corp. That's his stock symbol, GROY. Thanks, bud. Appreciate it.